Good morning. Welcome to Stock Market Today. It's Wednesday, September 9th, 2020. This is your host, Dan Russo, the Chief Market Strategist at Chaikin Analytics. Find me on Twitter. I'm at DanRusso_CMT. Stock Market Today brought to you today and every day by Chaikin Analytics. Head over to chaikinanalytics.com/today. Sign up for a free email. Get a lot of the content for this show. Also give you daily stock ideas to consider. That hits your inbox every trading day before the market opens. So U.S. equities were lower again in Tuesday's trading, ending near the worst levels of the day, with the Nasdaq now in correction territory, having fallen more than 10% from the recent highs. All sectors were down on the day, led by technology. The bond proxies did outperform. Treasuries rallied, curve flattened a little bit. The dollar was better on the euro, but lagged against the yen, as you would expect in a risk-off type environment. Gold finished up 0.5%. WTI crude down 7.5%, its worst day since June. So aside from the stretch positioning and crowded trades, there really wasn't one big catalyst that we can point to here and say, hey, what happened? Why this three-day sell-off in the market? I think you got a little bit of an acceleration yesterday after Tesla was snubbed from the S&P 500. Likely added a little fuel to the fire yesterday. But just remember, for the past 2 weeks, we've been highlighting the extended nature of the market here and saying, manage risk, don't chase, right? So now we can start to reevaluate position of the market relative to support, resistance, overbought, oversold, etc. So we get to the desk this morning, we're getting a little bit of a rebound. Up 70 basis points for the S&P 500. Asian markets were weaker overnight, with China down 2%, while South Korea and Japan were down more than 1%. European markets are seeing solid gains. Treasuries are unchanged to slightly firmer at the back end of the curve. The dollar is stronger against the euro and the yen. Gold is down 60 basis points. WTI crude is up 1.2% after its drubbing yesterday. So let's dive into the structure of the market here. We've lost the February breakout level, and that was one that we said was key. That becomes important. Why? Well, first, psychologically, it's always nice to hold all-time highs when, well, we didn't. So it is what it is. Now the stage is set for this to potentially be a false breakout, right? Breakout. You like to see breakout, retest, rally. Here we have breakout, failure. All right. Now we do have the rising 50-day moving average coming into play. So let's call it, we're still in a support zone for all intents and purposes. If you're bullish, you want to quickly, and I mean quickly, see a retake of the 3,400 mark for the S&P 500. Or what you would also like to see, which won't hurt your structure, is some sideways here, get oversold to start to rebuild for the next move higher. Let's hold 3,250. Let's hold 3,250 and become oversold. Then you're aggressive on the long side of your portfolio. Or let's quickly snap back above 3,400, meaning like today. And then let's become aggressive on the long side of the portfolio. You see the if-then? You see the scenario analysis? That's what I want you to be doing. I want you to be saying, if this, then that. Now, if 3,250 breaks, you're honoring your stops, and then you're looking for the next level. Right? There's your roadmap. There's the playbook. I have no idea what's going to happen. Neither does anybody else. But what I do know is we have room to oversold. So I want to think about what that means. If this is a quick V out, well, then we have to chase momentum. That's fine. Let's chase momentum. Buy the best stocks. Buy the best momentum stocks. Let's go sideways and hold support. Well, then we become oversold and we look for setups. Break. Well, then our stops continue to kick in and we raise cash. Chaikin money flow is bullish but fading, and we have room to oversold levels. There's your playbook, folks. So let's hit our market in a minute. What are we talking about today? Well, Nasdaq enters correction territory. We're down more than 10% from the highs. Textbook definition of a correction. SPY loses the February highs, falling below that key 340 level. We talked about that. Sentiment and positioning are still bullish as the major ETFs have roamed to oversold. We talked about that. Chaikin bullish percent falls below 30%, and this is interesting. We'll look at it here, but it's a proprietary metric for us. Percentage of stocks in the S&P 500 that have a bullish or better rating at Chaikin Analytics. Well, when it falls below 30%, we generally see some near-term choppiness. Doesn't always have to happen that way, but when we start to think about the roadmap, odds, probabilities, these are the things that we're thinking about. right? So I think the most likely situation is chop. Let's hold support and then run. That'd be great. Let's look at the major indices from a power bar perspective. Still bullish, right? So some deterioration, but still bullish. 10-2 bulls to bears in the Dow after they lose 2.25 yesterday. S&P 500 down 2.75, 136 to 81. Bulls to bears there. Big reset, if you will, in the Nas down 4.8%, 25 to 13 bulls to bears there. Small caps actually an outperformer yesterday for the small cap, 624 to 340. Bonds uptick, flight to safety, sends yields lower. According to the Chaikin Power Bar, small cap stocks and large cap stocks are somewhat bullish. Now let's hit our stock of the day. Speaking of, right, if we're looking at names, right, I would kind of put this one in the interesting but early scenario if you're conservative, interesting if you're aggressive. Okay, you have to know you. You do you. You know who you are as an investor. And if you don't, you need to figure that out quickly. And these types of drawdowns are a tough place to do it. But that being said, let's figure out who you are as an investor. Are you aggressive? You can look at a name like Lowe's, L-O-W. Very bullish stock, strong trend, strong industry group above the rising long-term trend line. Now we are just entering an oversold condition. And I gave you our checklist here to show you overbought but early. This means that we're oversold, but the overbought, oversold indicator is still heading lower. So what I'm saying, if you're more aggressive, setup is there for you. If you're more conservative, you're watching lows and you're waiting for the indicator to turn up. Then it's a higher probability entry for you. The checklist is great because it tells you the what in the top, right? Strong stocks, right? Bullish rating, strong industry, and then when. Well, we want them when they're oversold above the trend line with good money flow, right? Think about what that means. You're looking for a stock that's become oversold within the context of an uptrend and still under accumulation. Take a look at Lowe's today, but know who you are as an investor. Let's look at our sector tracker now, the movement of the major sectors over the last 5 days. Only one at the top of the list that's green, utilities, defense, and real estate as well, defense. Right after that, it's financials, which are kind of interesting because they've kind of residually holding on as yields have blacked up, and they actually had a nice day yesterday. So on a relative basis, so can't argue with it. It's something I'm watching. There's some positive divergences in play for the financials on a relative basis that I'm paying attention to. The thing for me is I'm just not convinced on rates yet. So I'm going to have to play that one out a little bit further. Middle of the road, staples, materials, industrials, healthcare, and discretionary. Bottom, energy, shocker, comms, and tech. Tech, just your source of funds. That's it. It's your source of funds past 3 days. We know who the culprit of the decline is, right? This is not up for debate. We saw it. Now we have a little bit of an understanding of why. We basically had an undisciplined buyer maybe enter the market, right, in the form of SoftBank, and just ripping call options to the upside, and it creates this feedback loop, right? SoftBank buys calls on names like Tesla and Facebook and Amazon. The options market maker sells those calls, has to go out and hedge him or herself by buying stock, drives the stock up, drives the price of the calls up. Now all of a sudden you have a feedback loop, and that's what's played out here. The question is, what's SoftBank's end game? And nobody knows the answer, right? So just follow price. We don't know what SoftBank's going to do. So let's just pay attention to price. That's what we do. Industry in focus, speaking of, is innovative tech services, which is kind of interesting here because we now have a bearish power bar ratio. Haven't seen that in a while. That's largely a function of a lot of the bullish names entering neutral territory as they've triggered technical data, technical breakpoints, right? Group's been an outperformer by 50% over the past 6 months, but it's weak now. No two ways about it. We follow a discipline, right? So we have to start to pay attention. Currently ranked number 13 of 21 subsectors. Names here we want to avoid: Coupa, Alteryx, and Event Bridge, all with very bearish Chaikin power gauge ratings. And let's take a look at XITK. Right? We would take the escalator up and the elevator down, if you will. Now we've hit a key point. We want to hold 150. Fund is still bullish. The trend is still strong. That's amazing, right? And this just gets to what we were talking about, how extended we were. I think the base case here is that we're working off an extended position, right? Extended from the average, extended above the upper volatility band. Now let's get things back in line. Let's hold, build a base, and move higher. Right? Could be the start of something more. I have no idea. But it just goes to show you we need a 25, 30-point swing here just to get back to trend. Gives you a sense of how extended we were. Still an outperformer, still bullish. Money flow fading a little bit with these closes near the low end of the range. Still an area I care about. I'm not giving up on TAC. Let's just put it that way, right? Don't chase is different from let's start to underweight. There may come a time where that becomes the right call, but it's not it now. Continue to look for your ideas. Continue to focus on leading stocks and leading areas of the market. Just buy them right. Let's look at what's trending now. Yesterday's S&P movers and shakers. GM up nearly 8% on their investment in Nikola. Go EV. Under Armour provided an update to their restructuring plan, sent the stock higher by 5%. Phillips Van Heusen getting some follow-through after their earnings announcement last week. Didn't see any news on TPR to send that stock higher by 3%. Morgan Stanley actually initiated on the airlines with a somewhat bullish view, so it sent a lot of them higher yesterday, including Southwest. Southwest up 2.8% on the day. On the loser side of the board, two key themes. One, oil. APA, FANG, Oxy down 10%, 10%, and 9.7% respectively. And then chip equipment makers, CLAC and Lam. AMAT was also under a lot of pressure yesterday. So just something to keep in mind there. Cautious Wall Street Journal article on the chip equipment makers to drive trading in those stocks. Let's dive into the charts now. And this one, I did have to pull this from my own personal resources. But what we're looking at here is an indicator that I created. It's an oscillator that tracks the percentage of stocks at Chaikin Analytics, our model, our 20-factor model, percentage of stocks in the S&P 500 that have a bullish or very bullish rating, right? And you can kind of get a sense for overbought and oversold, overbought and oversold. But what's interesting to me, overbought to me is not the trigger. The change, right? I care about change, rates of change, what's changing on the margin, right? Overbought is not your trigger. Overbought is maybe your heads up. We kind of get to this 34, 35% area. It's your area to say to yourself, probably a little too far here. The trigger to me is the change of pace or the negative divergences, right? So remember what I've been saying for 2 weeks. We're stretched to the upside. It's more than one data point, right? You may just see, I may just show you the chart on this show, but I have a lot of data points that go behind it that I'm taking a look at behind the scenes. However, what's interesting is that when we cross below 30, it tends to lead to choppier trading in the near term. As a matter of fact, over the next month, the S&P 500 is lower 51% of the time for an average decline of 1%. So just something to keep in mind as we think about, are we going to V up and out? Are we going to build a base? I don't know the answer, but we start looking at probabilities and connecting the dots as to what might happen. This is kind of interesting in light of the fact that the markets still have room to oversold. We still have dogmatic bulls from a sentiment standpoint as well. Take a look at the CBOE put-call ratio. Now, we did see a spike here. Put-call ratio, the absolute reading is spot 5.7, but the 13-day moving average is down here at spot 4.6. We've had a spike in the VIX. Back above 30. I think when the VIX is above 30, it creates an environment that's really difficult for most traders. It's a hard environment to trade. There's no two ways about it. Swings are violent in both directions. You just have to kind of know yourself again. Are you a short? And if you are an intermediate term trend trader, don't all of a sudden turn into a day trader in a 30 VIX environment. Like, just stick to who you are. Follow your process and connect the dots that work for you. And just as the S&P 500 lost the key levels, so did the small caps. I was watching 150 for the small caps. Really, 145 to 150 is a zone, but I think psychologically this June high was important. We lost it. So again, such similar situation. Do we grind here? RSI moving towards bearish ranges. So just things to keep in mind as you're thinking about how aggressive you want to be, especially with the market seeing a little bit of a pop today. It's going to wrap us up. Head over to ChaikinAnalytics.com/test drive. Take us for a spin. I'll be back with you tomorrow.
Hey, Grayson Rose here with StockCharts. Thank you so much for watching. I hope you enjoyed that video. If you did, consider giving it a like down below, maybe leave us a comment, and if you're new to the channel, you can subscribe at the link up above. We're gonna bring you daily content from an incredible collection of technical analysts and financial experts.